Good morning. This is Mark Soderberg with ADM Investor Services with your early morning ag outlook for Tuesday, January the 23rd. Mostly higher trade here overnight, actually making new highs as I speak, up 5 to 7 now in the soybeans, up 1 to 2 in the corn. Higher all three classes in wheat, a couple cents better. Meal up $3 to $4, steady, a little higher in the oil as well. Strength being led by spot soybeans, likely adding some weather premium due to drier weather forecasts in Argentina. Nearby soybeans have traded above yesterday's high here overnight. Hasn't been the case for beans or wheat just yet. However, we're back pushing those levels. Speculative traders yesterday were light buyers, with the exception of meal, where they were sellers of a couple thousand contracts. They remain heavily short in the ag space. Open interest was higher yesterday, almost across the board, a little bit lower in bean oil, with speculative buyers there likely covering out of some of the short positions. South American weather is about the same. Rains this week in Brazil will favor the central and northern growing regions after favoring the southern growing regions last week. This may bring some short-term harvest delays to soybeans, however, that will build some subsoil moisture for their second corn crop. Bean harvest is roughly 6% complete as of late last week. A bit more concerning for Argentina, with dry conditions really expected into for the next week to 10 days into the early days of February. Not much concern for the central growing regions of that country, but it could develop some stress here across the south. Better rains are expected into the early parts of February, but being that far out, the confidence in that is not terribly high. So heavy rains this week across the U.S. Gulf Coast in the U.S. Delta region. Flooding may be some concern in some areas. However, these rains will help improve drought conditions in this region here ahead of the U.S. planting season. Dry in much of the northern plains and the western corn belt, so we likely see some slightly increase in drought conditions in this area. Other news scarce this morning. There was a story in the wire service talk about China will continue to encourage reduced hog capacity in 2023. On average, Chinese hog farmers lost nearly $11 per head. By the end of 2023, their hog herd had dropped to 434 million head. That was down about 4% from the end of 2022. So look for another couple of months of hog liquidation here before supply and demand will be in better equilibrium. Meal usage in feed rations in China did drop 1.5% last year to about 13%. Dr. Michael Cordnier held his South American production estimates unchanged this week. He is well below the USDA for both corn and soybeans in Brazil, while Argentina, his estimates are slightly above those from the USDA. So a little bit higher here to start off with. Turnaround Tuesday. We'll see if we have any export announcements at 8 o'clock here from the USDA after no sales were announced yesterday. U.S. corn is priced slightly below that from Argentina through the month of February. In beans, however, Brazil is already offering bean prices at well below those from the U.S. So thank you for listening, everyone. I hope you have a wonderful day.